I don't believe into the diversification. You have to have 150 assets. That's just nonsense in my opinion. Some people, they confuse it themselves with the professional investor that has an army of analysts and portfolio managers, and they all report to him and they say to them, you know what, buy Amazon and sell Microsoft. No, we are individual investors. If I ask you to name me your holdings and you don't know them, then you don't know what the f you're talking about. It's simple as that. Hello everyone and welcome to another episode of Investing with Dimitri. Today I have my good friend and co-host at the Market Buzz, Nestor Mendoza. Join us, like, subscribe. Let's get into the video. I don't know how you do it, but the first thing I do when I wake up, before I even have my first cup of coffee, is just go through my phone and see all the notifications that I got when I was sleeping during the night.
Wow, no, I couldn't do it. I couldn't do it like that.
Mostly on Bloomberg. I get at least 3 or 4. You know, the Asian market's open. I want to know what is going on there. And like whatever's happening in Europe, like in the US when we were sleeping, if anything happened there, you want to see the futures. You know, it's just like the first 15, 20 minutes before I get my coffee, while I'm getting my coffee, before I brush my teeth. It's like the routine. I want to know, okay. And then my day starts and I'm saying, you know what? It might be a good day today. Or you know what?
Yeah, you have market sentiment.
Yeah. Or today maybe it's not a good day to,
Yeah.
you know, today I'm just going to go to the gym. I'm just going to watch the market. I'm not going to do too much. So if you do it like that, or some way, like at least knowing the information going in every single day, even on the weekends, like how many weekends crypto is going crazy because Trump did something?
Correct. And crypto usually tells you whether the market is going to open red or green.
Yeah.
Yeah. For me, actually, I start my day and I'll get out, like I'll chill in bed for a little bit and then I'll go make myself a coffee. And then I'll sit down in my computer. The thing is like I have built out my setup in such a way that it's like I have my financial juice on the side. They tell me exactly what I missed on European and financial markets. I keep it. I open up the interactive. I see what I have for my day, and then I just, I have a TV right in front of me on the top where I keep the S&P, the Nasdaq. I keep all of currencies, and I keep the treasuries. And then I have the VIX and oil prices. And I just like keep an eye out on when something crazy happens, when my portfolio moves. I'm like, okay, like what was the thing that happened? Well, I'm doing other things too. Because sometimes you pick up things that you didn't realize, and wait, why is the market just all of a sudden 1% down? And then you go in and then you say, oh, let's check the news, and then you evaluate, and then one day you might catch it early. One day you start seeing the move, and you're like, that's weird. That shouldn't be happening. Because like I set up my week. I'll go Monday. I usually set up the catalyst for the week, and then Alexa tells me exactly when I have to do
You're
it.
using Alexa?
Yeah. I want a Jarvis so bad. You have no idea how bad I want a Jarvis. Like I tried ChatGPT voice, and it's only a maximum of an hour,
Mm-hmm.
and I really liked it. Like I was doing research, and I was like, oh, but what does this mean? You know when you read a book and like, is English your first language?
No.
Okay. When you read an English book, and then a random word comes up and you have to go look it up in the dictionary,
Yeah.
and it takes forever, and it takes you away from the book, and then
Yes.
it happened to me a lot during university as well. ChatGPT is just like, yo, ChatGPT, what does this mean? Okay, thank you. And I just continue. Like it's just seamless, and then all of a sudden it was like having conversations. Like I want to have it for one of the episodes I do. I'm going to have ChatGPT, and also that's something I want to do as well. I want to do an episode with every single one of you, understanding the tools that you guys use on a daily basis.
Mm-hmm.
Because it's like, it's also good to share, but also good to know. Because like I've gotten some information, like Financial Juice, I paid $1,000. It was my first subscription ever.
Financial juice.
Financial Juice.
Okay, interesting.
Okay. And it was my first subscription ever. I paid $1,000 for life. They had just gotten started, and I bought it, and it was $1,000. And it's a guy that speaks to your ear. I just like, that's the reason I'm always with my headset. And then sometimes I stop speaking during the episodes because I'm like, the guy's speaking to me. You know what I mean? And he just tells you, oh, this happened in markets. This happened in markets. And he just keeps you posted. So I'm able to walk around the whole house with it. But yeah.
I'm a bit more traditional. I'm a Bloomberg guy. CNBC. in the afternoon when the show starts, and the Wall Street Journal and Barron's every now and then.
I'm big YouTube guy. I'm big on YouTube.
Oh, the YouTube is okay. So I can't get my news on YouTube, but if I want to look into a stock or into a situation, then you go into YouTube. You're gonna get it on detail. But the YouTube, it's you want to see conversations, you want to see like ideas debated mostly.
You want to see that? Like, I definitely want to see that, but there are a couple of YouTubers that I'm like, I trust. You know
Which
what I
one?
mean? Like,
Which
hmm?
one?
So people are gonna hate me for this because it's like, for example, me, Kevin, when I first started investing, the guy is brilliant, brilliant. Sometimes he's wrong,
You know what?
but
Isn't he like a real estate guy?
he's a real estate guy going into stocks, and then he's just like live streams his things.
Okay.
And he talks about market events, things that are happening. He ran for politics. He's done really well with the real estate, you know, but he's also into stocks and he has his courses and things. But I like the way that he looks at the market sometimes. You know, it's like sometimes he gives you a different perspective.
Who else?
Who else? I have, let me have a look. Let me see who pops up in my feed. Because I do watch CNBC and like there is good information on CNBC, but CNBC I take it with a grain of salt. I also meet Kevin, take it with a grain of salt. Like all of these guys, I take with a grain of salt. You know, Powell, I watch here. Have you ever seen the Fed's YouTube? It's great.
What
They teach you everything.
the YouTube channel?
Yeah, and it's great. Like it all of the tools explained with cartoons. It's fantastic. Like it's so good. You know what I mean? Who else? The Dumb Money guys I pay attention to a lot. There's this new podcast I watch to a lot. It's called Market Buzz on YouTube. It's so good. The best.
Yeah, I like that
Best.
guy.
Yeah.
That Dimitri guy. Yeah.
He knows what he's talking about. He knows what he's talking about.
Yeah, the market bus guys are like are good, are good. I think people should check them out.
Yeah.
They get some interesting ideas. And the good thing about the market bus guys, it's like on CNBC, you just get 5 people, 2 men, 2 women, but they're basically the same kind of investor. Okay, you have one short seller, one bear. Like us, we have different perspective.
Yeah, different markets, different perspective, different approaches. Yeah.
Like Mimi is heavy into crypto. Timothy is a bit crypto and stocks. Akim doing his thing. I'm doing my thing. You're doing your thing, and it's like all them mixed together on any given issue. You get a different perspective, which is interesting because you want to get. We don't look different, but our background and our strategy makes it like
Yeah, we provide very different perspectives and approaches.
yes,
You know, which is like usually like because of the CNBC guys, they're all like Wall Street people.
yes,
You know what I mean? They're all like finance people, but you have Timothy, which doesn't feel like he's finance too much. He's like, look, like I like this, and this is interesting. And it makes me money, you know. And then you have Mimi, which is like, I like crypto. I'm a technology person. Bam, you know. And you have a Q, which is like, up to you. And then you have you, which is the macro, pay attention, companies long term. And then you have me, which is like, I'm a little bit of an every pot. I'm like, where's the money? Where's the money? Let's figure out, you know. But it's interesting. But yeah, I also listen to like the Harmoses,
I like
Alex Harmosi. Yeah, like it's just because it helps you also see. It's like again, I go back to you're not buying a stock, you're buying a company. So you have to understand the marketing side. You have to understand the product lines and everything. Like Marcus Brownlee, I watch Linus Tech Tips for Nvidia news, you know. And you get all of these things. You get a different perspective from each one, and it's an interesting view of the
Let
market.
me tell you the best NVIDIA guy, okay? The best NVIDIA guy that I never miss a live stream, okay? And you know what? I'm going to give the credit to Mimi because she told me that she got in one of his live streams one time. And it was very, very entertaining with good value. I was like, you know what? Let me try it. The channel is called Scotch and Stack.
I know that guy. He's a very good guy.
Listen, NVIDIA, you want to watch the whole live stream, like you want to get the numbers, you want to get the sentiment, you want to get the aftermarket price action, you have to look into that guy. Nestor Mendoza,
Yes.
leave in the description below. By the way, I'm not missing another one of your live streams. I think the last 2 or 3 of them, I was like on them. Hopefully the next one I'm gonna join you and do it together.
Yeah. We do a live.
We're doing live.
We got to do it. We got to do it. Like some of the companies and some of the things. Like I remember, like the Nvidia trade was telegraphed by Jensen. Telegraphed. They spend money to tell everybody the CGT, the conference. It was insane. Like I went to an AI. My girlfriend works at the Entrepreneur Center in Dundee, and there was an AI speech, and we went to the AI thing. Me and my father went to it, and we both left that meeting saying, "Okay, we buy more Nvidia. Okay, bye." You know, like the moment we saw what Nvidia had in store, like the way the world is, it's changing drastically, and like you're not able to see it because quoting the words of Warren Buffett is not going to change how people chew gum.
Yeah.
You know, but it's going to change the world in many different ways, and it's coming whether we want to or not. Like it's coming. You know, it's the innovation in the space is gonna.
Semiconductors. Okay, so Nvidia obviously is doing its money from the high-end AI semiconductors. But the semiconductor sector is not just the high-end. They have also the very simple semiconductors that go into cars and into phones.
And into washing machines and into every single electronic
Every
product that you
single
own.
electronic, yes, exactly. So some allocation and some exposure into semiconductor, I think it's a must for every investor, at least if you want to outperform.
Yeah.
Or to perform along with the market, you need some semiconductors. And from there, it's your choice to make. I mean, what's your take on Broadcom?
Broadcom. I actually don't know much about them.
Me neither.
I actually have to do my research on it, but I know that they are
They are in the $1 trillion market cap.
they're super key
And they
on.
got up there completely silent. I mean, we all missed it. We're too busy watching Nvidia. I mean, we made a lot of money on Nvidia. Don't get me wrong, but I mean, other companies went up there like in the $1 trillion club, and
Like I have an idea, but I know that it's like they are part of the competitors in the AI sector.
are you of the opinion that you have to choose one of the players who is going to be a winner, or are you willing to bet on horses number 1 and horse number 2, and you are okay holding them both?
I can do both.
I can do both too.
I can do both. I can hold the ETF on the sector if I'm not sure, and if I have an instinct on one of the companies outperforming, I can hold that company too. I mean, if you had gone AMD because they were gonna compete in the AI sector, you would be punished right now, right?
Yeah, I
think AMD will catch up. Don't get me wrong. Lisa Su is brilliant.
I never understood that thinking that you have to choose the winner. You don't have to choose the winner. You can choose the top 2, 3 or pair of top players, and one of them is going to be the top winner, but the other ones will do well as well. I mean, why do you have to choose one bank? Why one semiconductor? Why one from the Mach 7? I never got that thinking. Doesn't make any sense to me. Or why do I have to choose between electric vehicles or energy? Because they're like different politics, but both can coexist and do well.
Yeah, for sure.
So investing sometimes, once you mix your political views in it, and you start. I mean, some people confusing it like it's your favorite football team. I'm only supporting Manchester United and Chelsea. Dude, this is not sports. This is money.
You know, there is this influencer online that talks about the world between perception and perspective.
Yes.
Okay, your perception of the world, like, what was it? Let me just double check. Perception versus perspective. Let me just, because it's interesting because it's like one of them means how you see the world, and one is how the world actually is. And you may think, oh, we need to go green, right? But if the world doesn't see it, people are not going to invest in it. People are not going to make the changes, right? So it's like, so yeah, perception is the way others interpret or feel about a person, a brand, idea, or event. And perspective is your own internal lens, right? So it's the perception of the world. You know, it's like how everybody else sees the world and how you actually make investments based on how the world sees it. And sometimes you have to understand what your biases are. One thing that I got really good at is knowing what I don't know and being okay with being dumb in issues. I'm okay being the dumb one because it means I need to learn something, and it means I'm willing to ask questions and understand it and understand it and understand it until I'm not.
Now that you're talking about perspective and about perception, in 2020, during the pandemic, we were like in lockdown. It was like a lockdown, and I remember where I was in my parents' house in the living room watching CNBC live, and I'm seeing the same people that are on CNBC today saying that oil is going. Remember for a moment oil went negative, and then it went up to $35, $40 or whatever, and everybody lost their shit. And everybody was saying that oil is going to zero, and we are going to be driving Teslas within 2 years. So what did I do? I bought ExxonMobil, which was single digit price to earnings. It had 8% dividend yield. That was the best investment I've done for the next 2 years. It did like 300%.
Yeah, I mean, you saw oil prices at the high.
My mistake though, at the time, I didn't have enough confidence to go heavy. I only did 2 or 3% of my portfolio. I didn't have the confidence because you're listening the experts, you just do the opposite. So not only you have to have convictions to take in the action, but you have enough convictions to go heavy. Like if I did a 10%, no, 10% I wouldn't because I wouldn't do a dividend now. But a 5%, 6%.
What's your risk allocation for stocks?
What do you mean?
Whenever you make a position, what's your, because you're talking about 1%, 2%. So in my short-term portfolio, I do this.
Yeah.
Where I have low risk, medium risk, high risk, and they have different parameters depending on the trade. So for example, like if I go into the S&P 500, I don't care about putting 25% of my portfolio.
Yeah.
Right? Because I know it's like, okay, like worst case scenario, we move 10%, and I'm like, whatever. Right? So I lose 2,500. Then change that based on the risk profile. So if I go, for example, if I go in options, I'm not gonna put more than $2,000 in an options trade.
Yeah.
Right? Because then it's like I can lose the 2,000, but in the S&P, if it goes really against me, I can lose 2,000. So I end up losing the same amount, right? So it's like I usually go 25% extreme low risk, then I go low risk, 10K, 5K, medium risk, and then high risk, I go 2K.
Okay. So the way I do it on my YouTube portfolio, first, I don't have any ETFs, so just single stocks. From the top of my head, crypto cannot be more than 15% total of the portfolio because it's risky. You get the drawdowns, and it's not just my money; it's my copy's money. So I have to take that into consideration. A single position cannot be more than 10%. I cannot allocate more than 10% in a single position. I don't care what that is. The most boring, low risk, 10% is the max. Because speaking of 10% and how it can hurt you, my top position today is UNH. UNH, it was like 10%. UNH took a hit today of 22% at the time I was watching the market. So if it was 30%, it will kill my year. But yeah, I'm down today like 1.5%. I'm gonna make it back in the next couple of weeks. So and from there, the more conviction I have on the stock, the higher I can allocate to it. For example, I have Microsoft after with 8%. I have Amazon with 7%. I have Berkshire Hathaway, which is like a safe haven, like 6.5%, 7%. And then as you go down, like all the way down, I have the Ethereum, the Rivian, which they don't make any money, CrowdStrike, which is good, but it's very, very volatile. And, so I don't have like a quote that say it has to be this number or this number, but it goes based on conviction, based on safety, and with some traditional risk management, like, parameters that I won't get killed if I make a mistake. Now, I don't believe into the diversification. You have to have 150 assets and all that. That's just nonsense, in my opinion. Like, if I ask you to name me your holdings and you don't know them, then you don't know what the fuck you're talking about. It's simple as that. Some people, they confusing themselves with the professional investor that has an army of analysts and portfolio managers, and they all report to him and they say to them, you know what? Buy Amazon and sell Microsoft. No, we are individual investors. Okay, maybe you have a worker, you have someone working for you, and you can do it. But
ChatGPT. I have many. I have many workers. Many workers.
no, we're laughing, but you actually have a worker and you like
Yeah,
someone
yeah,
is working for you.
yeah, yeah.
But yeah, so we have to make the decision. And I mean, how many stocks can you stay on top? I mean, you know really well Nvidia. Do you think are you able or capable to know 20 stocks as well as you do Nvidia? It could be like a whole day thing, no?
More. I think more. Yeah, like it's the thing is like I aim to, because like I'm slowly deciphering this sector more and more. For example, like I've done analysis on TSM, I've done analysis on ASML.
Yeah, don't get me started with ASML. ASML is
Well, I trusted. I trusted your advice on that. I went long on the reason I went long on Nvidia was because of the ASML comment that you said.
I told you, don't
Yeah.
trust it. Don't trust
And
it.
then TSM came in fine, and it was like done.
I told you, I don't have any faith in them. I don't have it. If ASML was an American company based in San Francisco, it could be like a completely different story. It would be more valuable than Nvidia.
Yeah.
Who is the CEO of ASML? I don't know. I don't know because the CEO of every Mac 7, I know their names, I know their wives, I know what they do,
Yeah.
what they say. They are behind the president on inauguration day.
Yeah, the marketing is him. Yeah, the marketing also. Well, it's funny because Yoni said it in the conference. He was like, "They're like, it's like if you want to, CEOs are salesmen. They're
Yes,
the salesmen. So it's like,
and there's a thin line between the CEO who's a founder and owns the stock and he's willing to be a salesman, and there's another between someone that doesn't own the stock but he has stock options, a mercenary CEO that is going to say whatever he has to say.
in order to get them up.
Yes, there's a thin line you have to walk. That's why the majority of my companies are owned or run by the founders. It's important.
Okay.
Like
Yeah, it's the truth. Yeah.
little things that you develop like over time.
Yeah. No, I mean exactly. And then you start things you start paying attention when they happen to you once or twice, and then you're like, "Hi, it won't happen to me again."
Yeah, yeah. You have to get into trouble once. Once you get into trouble once, then as long as you're not making the same mistakes again and again, then I think, I think that was your quote. It was like paying for school. What was your
Yeah.
quote?
Yeah. Tuition cost.
Tuition cost.
Tuition cost.
A mistake is tuition cost.
Yeah. It's and
I think
yeah.
I think you should tell ChatGPT to make it a quote with your name underneath.
Yeah. Nestor Mendoza 2024.
Yeah.
It's the truth. No, the thing is like the more I see this is like, it's every single business people start has costs.
Mm-hmm.
Stocks is one of the only ones that you can do with very minimal costs.
Yeah.
But then the cost can grow whenever you make a mistake.
That is a mistake.
So it's like you're not losing material or inventory, but you're losing capital, which is your manufacturing in this case.
And if you decide that you can't wait for the mistake to be corrected and you want to realize the loss so you can take your chances elsewhere, then you took a loss that it's going to take you more time to recover. I mean, I believe investing is just simple and people want to make it as complicated as possible just for the sake of,
Saying that it's complicated, yeah.
yes,
Yeah. Or it's super technical, or it's only a couple of people that can do it. But the
yes.
reality is that the action is simple: buy or sell.
I can explain to you exactly what it is, but if you ask me a reason why I made an investing decision, that's where it gets complicated. because there are so many backstories. Like, Nvidia, like if I told you Nvidia is not gonna get 5.5 billion, the news from yesterday, like in a vacuum, you won't understand. But you have to know the backstory. Okay, that was the sales. The stock is it had like a not so good 6 months, but it had like a good couple of years. The AI story. So it's like a big story that if you don't know,
You panic and then you sell and
yes,
then you make a quick decision and it's like, okay,
yes,
that was the last drop that made the camel's back and
yes,
like broke the
yes.
camel's back. But the reality is like, okay, like 5.5 billion. Okay, how much are they expected to make this year? They're making 200 billion. Okay, can he figure out a way to sell? He's figured out in the past that he actually, these bands have been there before and they've managed to get through them. This is okay. They managed to get through COVID and they survived. Okay, did they take a massive hit? Yes, they did. Did they come out stronger? Percent.
By the way, while we're talking in the last hour and a half, I got 3 Bloomberg news alerts. Let me read them to you. Okay.
Perfect.
Okay. At 8 o'clock, 8:07, exactly approximately an hour ago. Number one, the EU is working on a proposal to introduce restrictions on some exports to the US if trade negotiations fail. That's number one. 20 minutes ago, Trump says the US and Ukraine would sign a deal on critical minerals next Thursday. Number three, just 1 minute ago, the Supreme Court will hear arguments on Trump's bid to start enforcing an executive order that would restrict automatic birthright citizenship. So in the 1 hour that we do a conversation, you and I,
There's information out there.
yes.
Yeah, it's the truth.
And you're telling me you can invest without reading?
Yeah.
Because
No, it's the truth.
every single one of these, if they wouldn't be relevant for the markets, they wouldn't be reported on Bloomberg.
Yeah. Here is interesting because it's like the Italy's Meloni spoke with Trump today.
She likes him, that one.
Uh,
They're getting along. They're getting along. They're getting
it's like,
used to.
oh yeah. So it's like countries want to make a deal more than I do, and then here you start saying everything he said. Nvidia's Huang is a friend of mine. I'm not worried about Nvidia Huang. Nvidia Powell is always late and slow. If nations don't want to make a deal, we'll make it for them.
There you go.
You know.
So you see, then you have a podcast, and within the 2 hours that you have a conversation, so many things happened. The market went up and down like multiple times in the last 2 hours, and this is the job.
No, it is. It is. You pay attention, and like a lot of people think, oh, it's just you buy and sell, and no,
No, it's a bit more
no,
complicated than that.
yeah, and it's like I gotta be paying attention, and it's like yeah, like I'm paying more attention than I ever was. And the thing is, just like you also get like periods of it. There is a cyclicality to investing too, where all of a sudden you get all of the news at once. It feels because I don't know if you've realized this, but whenever you get one bad news, everybody gives you all of the bad news at the same time.
Yes.
Because it's like, okay, they're not gonna pay too much attention. So it's like everybody gives you all the bad news really quickly, and then for a while you're out of it.
Yes. Yeah, it's amazing how simple yet complicated. No, the word complicated is not correct. It's simple yet time consuming.
And why did you start investing? Because for me, it was like I wanted the freedom that it allows. Because you pay attention when you can or
Yes.
when you want to, but sometimes you don't have to pay attention.
Sometimes you have to pay attention. And I think the switch for me, the paying attention was once you pay attention and you can see the moves developing, as long you have a good memory and you can see the same things happening over and over again, different scenario, but the same result. You remember, okay, I remember the oil. I remember oil being down at $60 and ExxonMobil was like in the low single digits, in the high single digit. Okay. And I did well that time. Let me try that again. But if you haven't experienced a cycle, a full business cycle in the market, and if you haven't experienced a bear market, because if you haven't experienced a bear market, you're not an investor.
Yeah.
You're just in for the ride. Yeah. You have to experience a bear market from start to finish.
Yeah.
That drip drop, excruciating process of a year bad news after bad news after bad news, and it feels like never ending. It's like a death by 1,000 cuts. It's terrible.
Correct.
It's,
Yeah.
it's
But it's that though. It is that.
yeah,
And then it's funny because you come out of the other side way stronger and
yes.
fully scabbed over.
And then you go into the next one, and you're like, okay, you know what? It's not pleasant, but I can take it. But the new guy or the new girl that they just joined at the highs of the bull market, and they think, oh, investing is easy. They just go up.
Yeah. Nestor's been making money for the last 2 years. That's great.
Yeah, let me try that too. Why? Why is he better than me? Okay, so why don't you try it and see why?
Yeah. It's the truth. It's the truth. No, I think risk assets, you have to be part of the investor community or the investor group
Mm-hmm.
because it's a very lucrative way to be a part of growth and development. You don't have to be the best at it. Just let the best people do it. But they borrow your capital. They borrow your.
You know what? The investing thing is in the most realistic way, the best way I can describe it is okay, starting a business yourself, it's complicated, but you can bet on the best people.
Yeah.
And you can be a
Yeah.
part of it. Because you know what? If you bought $1,000 of Nvidia 10 years ago, that $1,000 is a significant amount of money today.
Millions of dollars.
Is it
I would be surprised. I would be surprised if it's not millions of dollars. You know what? I'm gonna do that.
maybe 10,000 10 years ago? It was like it's millions. I don't know.
I think more because remember we had a split.
We had like few splits.
Correct. So let's have a look at Nvidia chart. Nvidia chart. Okay, Nvidia calculator return. You put
$1,000 10 years ago.
10 years ago. It's more than 10,000. Annual returns are sitting at 70% on the last 10 years. $1,000 for $1,000.
There you go. A lot of money.
Insane. It's money.
It's a lot
money
of
and a
money.
half,
But you had to hold through 2018 and 2020 and 2022 and this
Correct.
year and whatever we are this year.
Correct.
So that 70%, it didn't came exactly easy, right?
Yeah. No, it's the truth. It's the truth. If you bought an IPO,
No, for
3.3 million.
how much?
3.3 million.
3.3 million.
But that was what? When did IPO?
1992?
Yeah. So 26 years ago?
No, more than that.
No, January 1999.
99, okay. Just right before the dot-com bubble.
Yeah. So it's interesting, It's like, and that's where good companies kind of like prevail,
Do you know which company I was reading the other day? Which company, if you put $500,000, you made like $500 million? Like if you invested 20 years ago, Monster Energy.
Yeah, the best performing stock in the stock market.
Yes. And do you know what is the best performing stock in the last 20 years? Other than Monster? Domino's Pizza. Domino's Pizza, I think in the last 10 years. Domino's Pizza has performed better in the last 10 years. I mean, I'm talking about the average than almost everything else, which tells you that the most simple, like if you are a random guy and you like to eat pizza and
I
drink
love pizza. I love pizza.
and bought those two, okay, you made a lot of money.
Yeah.
But if you are the super complicated guy and you have to do diversification and hedging and buying in Japan and have exposure in Europe and get some oil in Brazil, you underperform the market.
You're breaking even.
Yeah.
Inflationate your gains. The thing is like that's the beauty too. Like you don't have to pick like for example, like I enjoy Nvidia. I enjoy looking for this.
Yes.
But if you don't enjoy it and you're good at bartending, look at companies that are innovating in that space. Like it doesn't have to be the crazy things. You know what I mean? It doesn't like.
I mean, whatever. I mean, I think that's the way we got introduced into investing because at the time or in the beginning, the only companies that we knew was the companies that we had exposed to through our job or through our consuming habits. And you start looking like that. And then you start introducing to, okay, let me look into banks. Oh, I'm using JP Morgan. I know Jamie Dimon. Let me look into that.
Let me look at how he works, how he says it, how he conducts himself.
Yes, like the JPM it's my oldest holding in the Electro portfolio, and the reason is because in the university we did a case study about JP Morgan, how they navigated themselves through the financial crisis, and they got out of it as winners and larger, and the fortress balance sheet. So if you, by the way, at the time of doing it, it was boring as shit. Okay,
Yeah.
I didn't enjoy it one bit. But when you have skin in the game and you buy the stock, you say, you know what? Let me open the books from the university. Let me see what they were saying.
Why did they do it? How did they deal with this? Okay, let's start the research.
So it's
I actually did the same with JP. I was like, JP Morgan came unscathed from the financial crisis. How did they
yes.
do it? And everybody was like, no, the banks are going to collapse. The banks are going to collapse. And I'm like, what are you talking about? Right now,
Some banks did collapse.
I know, but the thing was, like, I was like, how can JP Morgan collapse? They have massive amounts in their books. All they do is like pay a yield, and right now their interest rates on their bank accounts pays 0.1%, and then they get 4% from the Fed, or 4.5% from the Fed. So they're making 4% on all of the money that goes in. And Silicon Valley just collapsed, and people are looking for safety. They don't care about yield. Buy JP Morgan. I bought JP Morgan. I bought a massive position in JP Morgan.
When?
When
Oh, that was 2022.
22. Yeah, I bought 22. I was like, JP Morgan makes sense. I made another position recently, Bank of America. I'm up 10% of the trade.
Oh yeah, you were talking about Bank of America lately. I had the feeling that you would jump into Bank of America. I
I
used,
was like,
I used to have Bank of America, but I got out of it like 2 months ago, and I spreaded the capital into JPM and Goldman Sachs.
okay. Well, Goldman is gonna do well. I have a friend that works at Goldman, but Goldman's gonna be fine. I'm not worried. But I was like, Bank of America has lost so much value, and it just feels that it's a punishment trade. It was like, why are they getting sold? It's like banks are about to, like, if we go into quantitative easing, Bank of America is gonna print money to let people borrow.
You know what? The banks, they are like tiers, and the top tier is JP Morgan by itself. Then the
Okay.
second tier is, I'm talking about commercial banks and investment, not purely investment, the Morgan Stanleys and the Goldman Sachs. I'm talking about the commercial banks as well. So it's JPM by itself. Then the second tier is Citi, Bank of America, and Wells Fargo. And then the regionals, which I don't like because they are risky as fuck. And in a crisis, the regional banks, the smaller
They
banks,
take a hit.
yeah, one crisis and they go under. So I don't like those. But, and one last thing, and then we're going to close because we've been talking for 2 hours. But our conversations are always like long because
Yeah.
we get into a rhythm. Do you know the billionaire Ken Langone? So Ken Langone is an old guy. He's the co-founder of Home Depot.
Okay.
His oldest holding is JP Morgan. He wanted Jamie Dimon to be the CEO of Home Depot, but he didn't convince him. And then he went to JP Morgan, and he said that he bought JP Morgan the day Jamie Dimon got into JP Morgan, and he's been buying the dip every single time, like the major dips, like the financial crisis.
Yeah.
He's been buying the dip for the last 20 years.
Freaking JP Morgan.
The highest conviction peak in his portfolio, and he's a multi-billionaire. Maybe he's not multi, but he has 2 or 3 billion. He's not like in the tens. So when you hear this kind of people, like Warren Buffett wanted to hire Jamie Dimon. I think Warren Buffett said to Jamie Dimon, if you want to make more money, come work for me with me in Berkshire Hathaway. That's the highest compliment. I mean,
Yeah.
it
Yeah.
doesn't get better than that. So yeah, I'm buying that as long Jamie Dimon is running
See ya.
JP Morgan, I'm buying the dip every single time.
JP Morgan is fantastic stock. It's fantastic stock. Like, it's such an easy business too. Such an easy business for him. He just like they're not over levered. They just safety. We keep your money. Like
The fortress balance sheet.
yeah,
The fortress balance sheet. That's their term. That's a JP Morgan.
yeah. It's that it's funny because it's like we had a saying. It's like if you ever want to know what the world really thinks, ask a banker. He'll tell you exactly what it is.
Yeah,
He doesn't care. He just cares for the numbers.
yeah. Jamie Dimon is on the level by itself. And yeah. All right. Let's wrap this up.